Hello, this is Solomon Davis, Right Side Trader. Today is March 16th, 2024, and this is my weekly market review, where I'm reviewing the Dow 30, that's DIA, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only. As we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. Then get educated. All right, though, but let's just go ahead and jump right on in here and see what we see on the Dow. All right, on the Dow, let me just starting out a little different. See if I do this. Nope, that ain't gonna get it. Do this right here. I usually bring this about right here, and then I maximize this. Maximize. All right, let's just zoom in a little bit here. On the Dow, we're still green. We are having a hard time getting across that yearly R1. We are pulling back a little bit, and all as we can see, we're getting a little bit of a wick on that candle now. But that's kind of like what's expected when you start getting close to a yearly R1. But let's go ahead and go down to the monthly chart and see what we see there. On the monthly chart, we are still above the 10 moving average, 9 moving average. We are bullish, but we are beginning to get a red month. You know what happens when we get red up month? It could follow up by another red month, or it could follow up by a green month and start making new highs. But the thing is, we are getting a red month. And we are still above the 10 moving average. We are a little bit extended. This month, we haven't made a new high. I had mentioned this a few weeks ago that the Dow might be actually a leading indicator of what's going to be happening in the market. We know we've been getting kind of extended. We've been kind of waiting for this pullback. But we just kind of like watch our indicators, watch our trade our plan, and plan our trades based on what we're seeing in front of us. All right, let's go ahead and go down to the monthly chart. The weekly chart, and see what we see there. On the weekly chart, this is where where we really key in at. You know, it seemed it was like 3-4 weeks ago now that we had that high, and I had said, maybe something is beginning to happen. And even this past week, when this market was looking like it was trying to go up and break that high, it could not break that high. Then it really got pushed back down to the downside. But this week also was option expiration week, and future contract expiration week also. So again, that might have had a lot to do with a lot of things. And where did it end up closing? It ended up closing below, a monthly. These are monthly pivots, below a monthly pivot. And a lot of people, a lot of traders out there, they trade. Even though I know all I show is pivots, there's a lot of people out there who actually use pivots to actually do their trades. And a lot of times they might be expecting things to stay below a certain level. Don't know. But again, staying below 390, is a good level to stay below, and maybe pivot. You don't know. You don't know what their plan is and what their strategy is. But we can see that we have a doji here, and maybe this is a doji at a bottom, at a level where this market had based at a little bit before back here, and now we might be getting ready to go up. And let me just do a little something. When I'm saying the market based a little bit right back here, this is a doji right here. So are we getting ready to reverse and head back up? Don't know. But that's what I'm looking at here on this weekly chart. And as we can see, we haven't made a new high yet. All right, let's go down here and take a quick look at the daily noise and be done with this. All right, daily noise. The daily noise, let's just zoom in here a little bit here on these last few weeks and see what we see. Again, this market has gotten really pretty choppy but it's kind of done what we kind of expected, and I think I'm ready for it to go back up. I've had enough of this. What I'm looking at, before I was looking at it closing this gap right here. It has done that, and it's played around down here in this area. Now we have created somewhat of a gap, not the real true gap, but we've created somewhat of a gap right here. So now that's what I'm looking at. We had our bearish pattern here at a top right here. These two candles, red candle, bearish engulfing, and we did have follow through to the bottom So that's what I see But after all that, we are going to be opening below pivot come next week. And these are weekly pivots. So will we end up staying below pivot and maybe coming down to an R a support one, not an R1, a support one? Don't know. But it'd be kind of, and then you would actually get that full body. We just about, like I had said last week, just about closed that, but it's played around down here enough and all. We have to kind of like wait and see. But if we do come down here, I would expect the market to kind of like bounce back up out of this level right here. And that's what I see. And that's all I really want to share at this time. Like I say, I'm still, like Wally would say, cautiously bullish and all, but I can see the market is kind of on a down leg. And if it's doing some kind of crazy zigzag like we've seen in the past on the Russell, is it about done? Is it going to come down more before it actually come back up? That's all I'm looking at. And that's all I really want to share. This is Solomon, Right Side Trader. Hope you guys had a great week. Hope you guys having a great weekend. And I'll talk to you next week. Have a good one. Bye.